Hi everyone. So Sudesh here. So this is the continuation of the last session that we have taken on tax saving investments. So now we can just let's go through some of the investments available under investments or categories available under various ET sections or tax saving sections. So one of the most common and most used tax saving option is we club it as and call it as ATC or ATC sections. So in total, combining ATC, ATCCC and ATCCD, you can save up to get benefits of about up to 1.5 lakhs. So to those who don't know how this 1.5 lakh benefit work, so for example, assume that you have an income of around 5 lakh rupees. So, and you have invested 50,000 in PPF, 50,000 in Sukanya Samriddhi account and 50,000 in National Savings Certificates, and you have a tax saving FD of around 20,000. So, according to income tax rules, you can get a benefit of up to 1.5 lakhs. So, for example, if your total income is 5 lakh and if you have invested 50,000 in PPF, then your total taxable income become 4,50,000. And additionally, you have invested 50,000 in Sukanya Samriddhi account, so you will get an additional benefit of 50,000. So your taxable income become 4 lakhs. And in National Savings Certificate also you have invested 50,000. So your taxable income become 3,50,000. Although you have made an additional 20,000 in tax saving FDs, you cannot get those benefits because you have reached the maximum limit of 1.5 lakhs. So that's how it's work. You can the maximum benefits which is applicable if you are invested that much amount, you can reduce it from your taxable income. So your taxable income becomes that much less. So you only have to pay tax for only 3.5 lakhs is your taxable income. So on the basis of that only you will have to pay your income tax. So under this category, ATC categories, there is some fixed income options available like EPF and VPF. EPF is Employer Provident Fund, which every major employers provides you. So a part of is deducted from your salary and your employer contributes a part towards it. So the interest rate is fixed by the government of India. So you get a fixed income on whenever you leave the company or at your retirement. Also, you can additionally voluntarily contribute additional amount towards PF, which is VPF, which is called as voluntary provident funds. And apart from that, there's a second option which is called public provident fund options, which any Indian citizen can take. It has a lock-in period of 15 years and currently provides an interest rate of around 8%. So you can even invest. You can invest into PPFs through authorized banks. Similarly, Sukanya Samriddhi account can be opened if you have a girl child. You can open a Sukanya Samriddhi account under her name, and you can also open National Savings Certificates from Post Office of India. They provide similarly senior citizen savings schemes that's also provided by Indian Postal Department. And there is also tax saving IFDs, which is for around 7 years. So these 6 types of investment provide you a fixed returns. So returns are fixed and it's fixed by the departments authorized by Government of India. So I will go through this in detail about various these schemes in our later sessions. So for now you can just get into names and various schemes available. So similarly, there is under ATC also there is various market linked and insurance where also you can claim deductions. So if you have a life insurance policy, not only LIC, any other insurance company, if you are taken an insurance policy, the premium paid for that insurance policy can be claimed. Various pension plans offered by mutual funds or an insurance company, the premium paid towards them can also be claimed. Similarly, ELSS. ELSS is equity linked saving schemes. Those are special mutual funds which has lock-in period of 3 years. So if you have invested in those mutual funds, then you can claim those investment for tax saving benefits. And there is also unit linked insurance programs, which are also market linked policies. Various insurance companies like ICICI Pru Life, everything, Reliance General Insurance provides various ULIP policies. So if you are invested in those, you can claim those also as tax benefits. But remember that total addition of all this investment can go up to 1.5 lakh. So if you have invested more than 1.5 lakh combining any of this investment listed, then additional amount cannot be claimed for that. Yeah, you will get returns for those investments, but you cannot claim it as tax benefit. So apart from this, the principal payment on your home loans. So if you have taken a home loan, if you are paying your principal of amount about that, or you are paying the principal amount as part of your EMI, then you can claim that also as tax benefits. Similarly, the stamp duty and registration cost for the new home you have bought. So this year, if you have bought some home and there is the registration charge and the stamp duty that you paid for that, you can claim that also. Similarly, the tuition fees that you are paying for up to 2 children, you can claim that also under same section. Okay. Now let's go to various salary components available. So if you see, there are some tax components in your salary which is fully taxable. There are some components in your salary which is exempted from taxation or partially taxable. So the basic salary, the DA allowance, special allowance, or the band pay, bonus, overtime that you get, personal pay, the food allowance that you get, the furniture allowance, the shift allowance. These are the components which is fully taxable according to Income Tax of India. So there are few other salary components which normally comes under various basket of allowance, which is partially taxable or non-taxable. For example, medical reimbursement, you can get up to 15,000 per year. Similarly, transport allowance of around 1,600 per month. You can also avail for leave travel allowance for a period of 4 years. If vehicle maintenance is there as your salary component, then you can claim that. If house rent allowance is as a part of your salary component, you can claim that. Uniform allowance, if that also make up a salary component, you can claim that. Children's education allowance, newspaper allowance, telephone allowance, meal coupons, etc. So you can claim all these tax benefits if those are the part of your salary. Okay. So what's house rent allowance? So house rent HRA can be claimed for tax exemption, which is minimum amount 50% of your basic plus day runs, or rent paid, whichever is minimum. So you can claim that if it's a part of your salary. So if the annual rent paid is more than 1 lakh, then you will have to produce the PAN card of your landlord, or we have to fill up that form, etc. And similarly, car maintenance allowance that you are getting. So if company provides you a car for personal or official purpose, you can claim up to 1,800 per month for cars up to 1,600 cc and 2,400 for cars greater than that. Also 900 per month in case company provides driver. So this can be claimed. Similarly, the meal coupons. So many companies, as a part of salary package, they provide meal coupons like Sodexo or Ticket, so which are completely tax-free, subject to it's ₹50 per meal, assuming that 22-day working, 2 meals a day, 2,200 rupees you can claim per month as tax-free. And even mobile and internet bill that that company provides you or pays, you can claim it as tax-free. So partially taxable components. So leave travel allowance. You can claim LTA twice for domestic trips with family in a block of 4 years. So current block is 2014 to 2017. So within this block you can claim LTA twice. So in the block of 4 years, if you have traveled with your family, then you can, if those are completely or partially dependent on you, you can claim the leave travel allowance. Meaning of family for this purpose is spouse and children, parents. So brothers and sisters, you can claim for brothers and sisters if they are completely dependent on you. There is no maximum limit for LTS and is decided by employer. So limit is decided by the LTA amount that's specified in your salary slip. And only expenses incurred in traveling. So travel bills can only be claimed. No other bills can be claimed under this section. So these are the basic knowledge that you should have as a normal salaried employee or a normal or average businessman or a new beginner. So when you are, but I would really advise you, if you are paying a good amount of tax, then consult a qualified tax consultant and get their opinion, check out various investment options and start planning for your taxation beforehand. Also make sure that February 1st, the new annual budget, look for it. There can be changes for the tax slabs and various deductions available. So the tax deduction that we discussed during the last 2 sessions is for financial year 2016-2017. So for the year 2017-2018, it may change, it may remain same, but follow the budget, which is just 1 week away. Thank you very much.